Hello, everybody, and thank you for joining me on this powerful presentation. And if you have been trading Forex for a long time and you have not learned this little hack that I just recently discovered, you're going to love this. And I promise you, it is going to change your life in terms of your ability to find profitable trades. And once I discovered this, I was like, oh my God, I can't believe I've been trading for over 5 years and it took me so long to learn this. Okay, so without further ado, let's go ahead and get into this presentation for today. All right, so we're going to be talking about old school Forex, right? We're getting to the nitty-gritty of what we do as Forex traders. And a lot of us overlook the basics of Forex. We get so wrapped up into trading charts that we forget that we're trading currencies and we're betting on one currency to be more valuable than the other one. And we get so lost in our indicators on the charts and what's going on with the market that a lot of times we just forget about the basics. So everything you see on retail trading charts is meant to be a distraction from what is actually going on with the currency pairs. I know I'm guilty of making this mistake as well, especially as I look for different techniques and talk to different people about trading. I know for one, I get lost with price action, momentum, trying to read this, trying to read that, and then I just get lost in with all the noise that's going on in the market. So in this presentation, I'm going to show you how to take trades your broker likes and have a great chance of being successful, because your broker is most likely taking the same trades and has secret data that the public doesn't have. I'm trying to tell you guys, on these retail charts, there is so much noise in them that it's very difficult to read them. And unless you have proprietary software where you can see what is inside the candles on the charts, it's kind of hard to understand what is actually going on. You can get pretty good, and with a lot of experience, you can kind of know what to do. But there is a big difference when it comes to trading and you just know what is going on and you know what is happening. Now, when I'm trading, I'm not guessing, I'm not trying to figure things out. I'm going based off of real data, real facts, and I'm following the same information that my broker is following, and it is making my life a whole lot easier. So the best thing about this is you don't have to worry about learning charts or even reading charts. Since I started using this technique, I can't even remember the last time I analyzed a chart and tried to figure out some candles and all this kind of stuff. I simply just don't need to do it anymore. And it's making my life a whole lot easier. So before we get too deep into this, it's important that we go over the basics, especially for those of you who are watching this video and you are new to trading, or even experienced traders and maybe you just forgot about this. So each currency pair consists of two currencies. The first currency is known as the base currency, and the second currency is known as the quote currency. And the purpose of the quote currency is to value the base currency. So I know I don't always think about this, but anytime you have a currency pair, so let's say, for example, you have the euro US dollar. The role that the US dollar plays in that currency pair is it evaluates the euro, and it kind of determines if it should be going up and if it should be going down. So that is the relationship with each currency pair. So every time you buy a currency pair, you are expecting the base currency to rise above the quote currency, and every time you sell a currency pair, you are expecting the base currency to fall below the currency. That's pretty straightforward. I think that's something that everybody should know. So, for example, if I buy the euro US dollar, I'm expecting the US I'm expecting the euro to outperform the US dollar. So that's something that all of us should pretty much know at this point. And I'm not going to dig too deep into that. But so let's get into the actual trades itself. Every time you place a trade, your broker may include spreads, charge commissions, and if you hold trades overnight after 5 p.m. Eastern Standard Time, when the New York session closes, you will also have swap fees. Now, for those of you who are familiar with like raw spreads, it is possible for you to have currency pairs where your broker does not charge a spread, where you have like a zero for the spreads. Usually you can find those on the euro US dollar, the US dollar Japanese yen, to name a few. And then most cases, your spreads should be under 1 pip, especially with US dollar currencies, and if you're using offshore brokers, and if you're using a ECN account. I really don't use US brokers because it's impossible. I shouldn't say it's impossible. It's very difficult. You have higher spreads. You're not allowed to hedge. You have different types of FIFO rules and all kinds of things that get in the way that makes it harder for you to be successful. With offshore brokers, it's a lot easier to be able to trade more freely. So I actually discovered this secret by making a mistake. Normally, I like to have all my trades closed usually by around 2 to 3 p.m. Every day. And that's because I always wanted to avoid paying swap fees, because a lot of times the swap fees were negative, and I didn't know what would happen when the Asian session came around, and I did not want to be stuck in positions that was going to cost me money in addition to being negative. So throughout my years as a trader, I always made sure all my trades were closed between by like 2 or 3 o'clock in the evening before the US market closed. And then that way, I always avoided having to pay swap fees. Recently, I got stuck in holding trades overnight for several days. And I noticed, wow, my swap fees are positive. So it got me thinking, and I was like, okay, you know what? I need to do some research on this and just understand the swap fees further. Because at first I thought, okay, you know what? I think swap fees is just another way for brokers to make extra money. There is a lot more to swap fees. Swap fees has nothing to do with brokers trying to charge extra fees to make money. There's a lot to this, and I'm going to show you guys in this presentation just how big of a deal swap fees really are, and how it is a game changer for us retail traders. So you see, positive swap fees are determined by buying the base currency with a higher interest rate against the quote currency, and consequently, a negative swap comes from buying the base currency with a lower interest rate against a higher rate with the quote currency. So, I mean, that right there is a significant amount of information that is a game changer, in my opinion, because now, I mean, just knowing that information right there, it tells you what you should be doing. It tells you if you should be buying or selling. It tells you which currency pair is more valuable, which is powerful information. So let's take a look at what this actually looks like. All right, so you can see here, the broker that I use charges a commission, but now I'm not worried about paying commissions, because now that I understand how swap fees work, I use them to my advantage. And you can see here, in this case, my commissions is only 28 cents, but my swap fees is $1.77, And you can see here, all the trades are positive as well. So, my broker is now paying me to take winning trades. Like, this is like game changing. It doesn't matter if there's high impact news events. In fact, this even works even better. So I don't worry about fees. I don't worry about spreads. I don't worry about anything, because now I am most likely taking the exact same trades that my broker is taking. And so you can see here that I have positive swap fees for my broker, indicating the US dollar has higher interest rates than gold, the Japanese, and the euro. So you can see here, sell, sell, buy, sell. And this is a beautiful situation. And this is pretty much what every day is looking like for me. All right. And so let's make sure we understand this. Please understand, as Forex traders, this is the foundation of what we do. We place trades on the basis that one currency is more valuable than the other, but so many traders forget this concept, and we get wrapped up in fundamental and technical analysis and so much noise in the markets and charts. It's so easy to get distracted, but I promise you, pay attention to what I'm trying to tell you guys and understand the connection between the swap fees and what is actually happening with these currency pairs. And this information is everywhere. It's on Investopedia. I'll show you guys the direct link in this video as well, so that you guys can research this yourself. You can also use Google and research this as well, and definitely try it out yourself so that you understand what we're doing here. So when you understand that swap fees tells us which currency is more valuable in a currency pair, then we automatically know if we should be buying or selling. Guys, I don't care about pullbacks. I don't care about retracements. I don't care about any of that stuff, because if you're in the right direction, the market is going to eventually do a correction. And when it corrects, you're going to be on the winning side of that. And in a worst case, even if you are holding on to trades, who cares? Because now you're going to be making more money on the swap fees. All right. So when a broker pays a positive swap on a position, it's because they already know the base currency is weakening or getting stronger. Guys, this is like having a crystal ball in the Forex market. So anytime you see a positive swap fee, your broker gives you a positive swap fee for that trade, because they know that the base currency is getting weaker if you're buying that currency pair. And then, if you get a negative swap fee, it's because they know that base, they know that base P, the base is, or the base currency is also getting weaker if you're buying that currency. So your broker already knows which trades are good and which trades are bad, and it's all right there with the swap fees. So this is why your broker punishes you if you trade in the wrong direction, because they know that, hey man, this is gonna be a bad trade. Sometimes you can make some money off of a pullback, but at the end of the day, you're still going against the trend or the wrong direction. So make sure you save this link or you research it yourself, because Investopedia is kind of like an encyclopedia for trading, and it goes into great detail. But I took a screenshot from Investopedia, and this is exactly what it says. According to Investopedia, swap rates already factor in supply and demand, price action, future interest rate movements, liquidity conditions, and market expectations. How amazing is that? You can find this out just by using just by the swap fee. If you have a positive or negative swap fee, all of that information is right there. So when you're trying to find this information or figure it out on the charts, you're using like CCI, you're using different momentum indicators, you're using different moving average indicators, but ultimately everything that you're trying to do on the charts is to try and figure out this information. Now be honest with yourself. How many times have you been trading and you were looking for this specific information? And most of the time, you're not going to be able to see this information directly. You can kind of figure it out with like MACD and like different volume indicators and stuff like that. But the swap fee is already telling you all of this information. So if you want to look for more information on this as well, this is also known as the rollover rate. So the rollover rate is also known as a swap fee. So you can do more research on this and find even more information that explains the connection between rollover rates and swap fees. There's a slightly different calculation, but they ultimately mean the same thing. All right, and so now we're getting to the juicy part. So now that we have some context, let's look at how we put this into action and make this strategy work for us. All right, so a couple disclosures here. Some brokers will give you a negative swap regardless of the position. If your broker is like this, I highly recommend changing brokers unless there are other perks that makes it worth it. Below is an example of this. You will notice all trades, even with buying and selling the same currency pairs, have negative swaps. If this is your situation, treat the position that has the lowest negative swap as you would a positive swap. This broker is LMFX and an ECN account. In this case, the broker doesn't charge commissions, which is a nice perk. So for those of us who live in the US and Canada, we don't have a lot of options when it comes to offshore brokers. So LMFX is probably one of the better ones that I can think of. They're reputable, you can trust them. They have excellent customer service, and they're a pretty good broker, but they're not the best broker by any means. They're just someone that's available to us, and you have to have an offshore broker if you want to be serious as a trader. So I'll just go over a couple examples here. So you can see here, I'm buying the Australian US dollar and I'm selling the Australian US dollar. So in theory, one of these should be positive. But because this broker, I don't want to say they're ripping you off, but in a sense they kind of are. I would just have to treat this one as the positive swap, because this one it's only negative 0.04, whereas this one is 0.16. So in this case, my broker favors selling the Australian US dollar. So you can see there's quite a few examples of that on this chart. So that's something to keep in mind. And looks like the spreads are kind of high as well. So if you want to have a personal offshore account and you live in the US or Canada, these are things that you just kind of have to deal with. But in the end, all these trades turned out pretty well. So you need to use offshore brokers if you live in the US or Canada, since there are limited options for brokers. For this reason, I recommend using prop firms like the Funded Trader, who give you a choice of 3 brokers. ACAP is based in Australia, and Purple Trading and Think Markets are based in, I think, London or like the UK. So my favorite one from these two is Think Markets, but I like Purple Trading as well. So having a prop firm is very useful for us, especially in the US, because they give us access to a world of other brokers. I don't use ACAP. I tried them. The spreads was not good. The executions are pretty slow. You have to have a VPS to use ACAP if you live in the US. Otherwise, you're going to have a lot of latency issues, and some of your trades might not get triggered. And when it comes to finding a server for Australia, I think the closest location for us is like in China. So it's still kind of hard to get a good connection. But purple trading and think markets, super low spreads, super fast speeds, and phenomenal brokers, in my opinion. All right, so now we're getting into the nuts and bolts of the strategy, and I'm also going to later on do a open up my MetaTrader 4 so that you guys can see this for yourselves. So open your MetaTrader 4 with the broker you want to use. For this purpose, I recommend using a demo account. So when you're deciding on which trades that you want to make, I recommend doing this on a demo account. This way you can have like 5 to 10 different currencies that you're going to be trading, and then you just pick the best from that list. So this is why I recommend doing this on a demo account. And then when you go to your live account, that's where you place the trades that you want to take, and also use the lot sizes that you want to use. So for the demo account purpose, we're just using that to determine on which trades we want to take. All right, so choose the currency pairs you want to trade and place one buy and one sell on the same currency pair. The lot size isn't important, but you can use the same lot size you intend to use on your live account. That can be helpful. This way you have an idea as to how much your broker is going to charge you for commissions and the spreads. So that's a good idea, but not necessary. And you want to make sure that you place your trades before the New York session closes at 5 p.m. Eastern Standard Time. I typically place my trades between 4 to 4:30 p.m. Eastern Standard Time. And I do this because the market really isn't moving after 4, so I don't have to worry about any sudden moves throwing things off, because typically from 4 to 5, whatever the price is most likely going to be the same for the rest of the day. All right, and then on step 3, check your trades sometime between 5 to 6 p.m. The positions that have positive swaps are the trades you want to place on your live accounts after 6 p.m. When it comes to stop losses and take profits, I recommend using your own risk management guidelines. For me, I keep both blank. Rather than using stop losses, I follow the rule of using a 0.01 lot size per $100 balance. Even if a trade pulls back 200 pips in one day, which is very rare, that's only $20 and not going to blow my account. So this is very important to understand. I am fully committed to this strategy, and because I've been using it for a while, I know that it's super safe. So when I go to bed at night, I sleep peacefully. I can relax during the day. I mean, I can just do whatever I want to do. I don't have any stress. I don't have any pressure, because I know everything is going to work out perfectly with my trades, because I know that I'm trading in the right directions, because those swap fees is based off of real data, real facts, and I don't have to worry about stop losses. On top of that, I don't want to be prematurely stopped out. So I avoid using stop losses altogether. And in most cases, I avoid using take profits as well. And I just decide when I'm going to close my trades. So there are times of the day where you're going to have the highest price and the lowest price. That's a whole other conversation. But I can follow that in terms of when I decide to close trades. And, if I have a trade that's up 200 pips, I might go ahead and close that one. And that's why I love this strategy so much. Because even when I carry trades, I'm making money holding on to winning trades. Because every day that goes on, they increase my swap fees. So in addition to having winning trades, I'm getting more money from the interest from holding those trades. So I don't have the incentive or the pressure to close trades all the time unless I absolutely need to, which is like unbelievable awesome. All right, so does this strategy work during news releases? And I have found this strategy to work very well during news releases. In fact, I now look forward to trading high-impact news events. This strategy lets me know almost a full day in advance before a news release is scheduled how things will play out, especially in the US session. So like, 5 o'clock p.m., I pretty much know if I'm trading a currency that has a positive swap fee and the next day there's some big news scheduled on the US dollar, my broker is already telling me, hey, this is what's going to happen tomorrow. So I have plenty of time to prepare for it. If the price pulls back, this gives me an opportunity to get new entries at a better price point. I don't need to close any negative trades because I know that once the big news comes around, the market is going to use all that volatility to get the price back down where it's supposed to be, and it's a huge win for me. So even if the price has a strong pullback, I open new positions with much better entries because I know the result is going to be the trade will eventually have a correction. Additionally, because my swaps are positive, I don't mind holding on to trades for several days. When to close trades and what to watch out for. So if you find yourself holding on to the same trades for several days, then what you want to look out for is a change in the swaps. For example, if you place a trade on Monday and had positive swaps on selling Euro US dollar, and you continue holding on that same trade on Tuesday, as long as the swap fees stay positive, then your position is still good. If you notice on Wednesday, your positive swaps are lower or turn negative, that means something has changed and you need to close that position and change directions. So if you were selling gold and you were having positive swaps on Monday and Tuesday, and then on Wednesday, you're like, oh my God, now they're dropping. You need to go ahead and start making some changes because that means something has changed and your broker is letting you know, hey, look, we're changing our positions here. You need to follow us because you're most likely about to lose some money. So that's a very good trigger to look out for. Another thing to keep in mind is your broker isn't perfect. There may be times you find yourself too early or late on a trade with this approach. If you find yourself in this situation, and as long as your first position is correct, I recommend keeping the trade open and add more positions at better entries. For example, let's say you place a short on gold, which is XAU USD, on Monday at 1900 because you had positive swaps, and gold shoots up to 1920 on Tuesday. If on Tuesday the swaps are still positive, you can add another position for XAU US dollar. Usually what happens is sometime in the week, the price will drop back down close to where the first trade, your first entry. And you can close both trades with profit or keep them open if the trades are still valid. So that's an important note there. So for the most part, we are paying attention to any changes with the swap fees. As long as the swap fees stay in our favor, you can hold on to these trades. All right, so let's talk about how to connect with me. Facebook is by far the best place to reach me. I'm on Facebook all day. I have Messenger on my phone. I have Messenger on my computer. So you can you can find me on Facebook by typing this in, and then you can add me as a friend. And if you have questions about my program, if you have questions about Forex, Messenger is the best place to talk to me. You can also reach me by leaving messages on my website. There's a form there on the Contact Us page. And you can also email me as well. I check this all the time. But by far, Facebook is the best way to reach me. Email is the second best way to reach me. And if you decide to become one of my students or a member in my program, this right here is the link to my private group. And the benefit of being in my private group is you get to also talk with other students and members who have been in my program for several years. And you can also see how active I am there. And I have a ton of resources, videos, screenshots, explaining all kinds of things, because I don't want to overlook this. This strategy is amazing, and technically you don't even have to know how to trade, as long as you understand what I'm talking about. And then in a few minutes here, I'm going to show you my MetaTrader 4, so you're gonna be able to see all this happen. But you still need to know how to trade. All right. I still, because of my experience, I still know, okay, well, when a price is going to hit a strong support zone, or if it's reaching like an oversold area. I have a lot of other knowledge that just gives me that extra edge that makes me a solid trader. But this right here is a big part of it. But please don't forget that you still need to understand what it is that you're doing. So when you work with me, you're able to communicate with me all throughout the day. Whenever you have questions, I use Zoom for my screen shares, and we can trade together. We can do all kinds of great things together. So that's something that I recommend. And then this right here is just a little bit about my program. So one-on-one coaching, live analysis, dual screen sharing. You can share my screen, I can share, you can share your screen. We can talk through things. My program is designed for absolute beginners. I'm talking like people who don't even know what Forex is. I have a 6-week program that gives you lessons for those 6 weeks, just for the structure, because most of us have to have some type of structure. Otherwise, things just get overwhelming. So, you focus on week 1, week 2, and by the time you get to week 3, you're going to start to feel like, okay, well, I actually know what I'm doing. And then you also have me as well, just like I'm doing this video with everyone. And we can do that together as well, which is awesome to be able to connect with someone like me personally. And another benefit with my program is I don't charge monthly support fees. I don't have annual fees to stay in my program. It's just a one-time fee of $199.99 currently. That price might go up in the future. So I recommend getting in, especially with this low price, and you get all of me. You're also part of my personal Facebook as well. You're not just a member of my program, but you become a friend as well. All right. So with that being said, now let's turn to our MetaTrader 4 and see what this looks like. My recommendation is to use Think Markets. If you live in the US and Canada, your only way to get this broker is going to be through the Funded Trader. The prop firm and you can choose Think Markets as one of your brokers. Now, for those of you who live in the UK, uh, you should be using this broker anyway. This broker or Purple Trading. I'm jealous of you guys to have access to brokers like this, and so that's that. So let's get into the MetaTrader 4 and let's put all of this together. Hello, everybody. I hope you're learning so much from this great video on the value of understanding how swaps works. So now it's time for us to put this all together and go to the MetaTrader 4 and see exactly how this works. All right, so as you guys can see here, I already have the trades that I want to place. So I have one buy and I have one sell for each trade. And you can see here the swaps. So this one is kind of tight. So this is pretty close, but this is still in favor of selling. So when so right now it's 5:21. So when 6 o'clock comes, all the other trades are going to be the ones, or not all, I shouldn't say all, but the buy for Australian US dollar is going to be the one that I'm going to close. And then let's look at the next one, the British pound US dollar. All right, so this one is kind of tight. So when I see a situation like this, because the swaps are so close together, that means the broker is fairly neutral on this one. So because this is not that strong of a trade, once 6 o'clock comes, I'm just going to go ahead and close both of these trades and just take a very small loss on that one. And this, by the way, is also why I recommend that you guys do this on your demo account, so that when it comes to your live account, you're only taking the best possible trades. And so we're not going to do anything with the British pound US dollar. And then we have gold. All right, so this is a nice one. So you can see here that this broker, it does not want me to buy. So they're still pretty strong on selling. So another thing to point out is the higher the swap, the better the trade. So we want to. So far, we want to sell gold. We want to sell the Australian US dollar, but just keep in mind, because this is so close together, this is an indication that it's not going to be that profitable. So if I see something like this and I am able to make 20, 30 pips, I'm probably just going to go ahead and take that and be happy with that. All right, so we're selling the Australian US dollar, we're selling gold, we're leaving the British pound US dollar alone, and then the Euro US dollar. So this is another tight one. Now, because my spreads for the Euro US dollar are 0, and this is another reason why you want to wait until after 6, because right now the spreads are sky high. But with this broker, for the Euro US dollar and the US dollar Japanese yen, my spreads are actually 0. So after 6 p.m., when everything settles, then it makes sense for me to go ahead and close certain trades. All right, now this is a good one. So my broker is in favor of buying the US dollar Japanese yen. So we now have 3 strong trades. The Euro US dollar and the British pound US dollar are looking pretty tight. When you only have like a 0.01 swap, it's just tight. So it's this is going to be similar to the Australian US dollar, but you can see the difference here though. Um, for buying the Euro US dollar, they're charging me 0.09. So they were charging me almost a full pip in this in the swap for buying this trade, which means my broker does not like this trade at all. So they must know that this is a bad trade to make. And then they can also determine that the margins is not going to be that great. So these are trades that you don't really want to take, so to speak. But we at least from these 5 have 3 solid trades that I'll be able to make, and then I can avoid the small losses, and then I can use the lot sizes that I really want to use on my live accounts. So that's this strategy in a nutshell, and it works very well and it's reliable. So I've done a lot of testing on this before I'm showing it all to you guys. So once again, I want to say thank you to watching this video. I put a lot of work into it. So I appreciate any comments, likes, reach out to me, and thank you once again for checking out my channel, and you guys have a great day, and I hope everyone is successful. And don't forget, if you want to trade directly with me, whether it's with options or Forex, I do private coaching, one-on-one coaching. I have a private group on Facebook. You can connect with me through Messenger on Facebook. You can chat with me all throughout the day. You can ask me questions. So my Forex program is incredible, and you won't have someone like me that you have so much access to, especially at the prices that I charge. Because to be with me is only to be a member of my program is only $200 one time, and it lasts a lifetime, and you'll receive my complete Forex book as well. So you get the private coaching, you get my complete Forex program. We can even do trades together. So if you want to do a trading session, we can go ahead and make that happen. And I never charge monthly fees, and I never have additional costs for my program, unless of course I'm doing something completely different. But I love Forex, and I love working with people. So once again, thanks a lot, and you guys have a great day.